Hello, welcome back to Core Finance. I'm Matt Brown. I'm joined by Nicole Elliott, private investor and technical analyst. Good morning to you, Nicole. We're going to look at, in our first video, at cable, and this is coming on the back of the budget statement yesterday. People kind of actually ignored that. It was more the productivity from the OBR, but the OBR doesn't really know what's going on and what to do. We saw the pound sell off initially, but rallied into the close. Can we hold above 133?
Well, this is quite an important level here, Matt. Exactly. That's why I've chosen this one today. First of all, because everybody was so negative about Mr. Hammond yesterday morning, suggesting he had to leave the cabinet and whatever. And now humble pie has been eaten by some journalists who've retracted it, and some have actually been polite enough to accept that he's been quite canny in how he's used his rubbishy deck of cards that he's been dealt. So I think that's quite interesting in that sometimes we've got counterintuitive moves. The second thing that happened yesterday afternoon was that the Fed published its minutes of its most recent FOMC meeting, and there they actually specified that while the economy, in their view, was doing quite nicely, and although inflation had undershot a little bit, they felt it would get to target eventually, but they spelt out that they are worried about a reverse in asset prices would hit the economy. So that's actually what gave the spurt yesterday afternoon. And the US dollar sold off across the board. It wasn't Mr. Hammond's budget that got us up here above 133 cents per pound. But it is an important level, and it does come with a lot of background here. And it's still a currency that most people, gut feeling is, sell it because of Brexit. The less we know about Brexit, the more we ought to be selling this. So there are too many sellers out there for starters, so that's why it's gone the other way. Also, we've got this very long rectangular base. I've deliberately sort of been very wary on that spike. We did go up a bit higher in September, but we got capped by Fibonacci retracement resistance up there, and then that's a 50% level. So we're halfway at the moment. We're just trying to close above the halfway mark between pre-referendum gung-ho euphoria and post I don't know what Brexit disaster. So we're at the midpoint. It's not good, it's not bad, we're sort of okay-ish. Now my view is that because of this sort of gently sloping upward trend line, because we've had a series of ever so slow steps higher, it is stepping up like a staircase. It is, of which the last one was a bit too steep. Yeah, the tread on that step was too steep, so that's why we came down here. Too much, too soon, too excited. Now we've created a little base against this trendline support, which happens also to coincide exactly in the spot with what had been trendline resistance, and that is as it should be. What was resistance becomes support. It's also at the top of this big rectangle. So before, the top of that rectangle was resistance. Now, in this quarter, it's become support. So, I mean, there are lots of very long-term, solid reasons to expect further slow improvement of the pound against the US dollar.
Super, fantastic. Well, hopefully towards the year end we can maybe edge towards 140. Nice little Christmas present for all those pound traders. But in the meantime, Nicole, thank you for joining us.